Hi, welcome to volume 2 of the market structure. In the first session, I have explained what is market structure, bullish market structure, bearish market structure. I've also explained the invalidation of bullish and bearish market structure. So I'll review that quickly before we move forward into this session. Now, a bullish market structure, price makes higher lows and higher highs. And when the price breaks its recent higher low, the bullish market structure is gone. It's finished. In the bearish market structure, the price makes low highs and lower low formations. As you can see, low highs, low formations. Now, when the price breaks its more recent low high formation, the structure's gone. So that is a definition of bullish market structure, bearish market structure, and rules as to their invalidation. Now, it's important to understand if in the bullish market structure, price stops making high formations. So it's something like this. As you can see, price stops making high formations, and it's even started making low high formations. The bullish market structure is valid because for the price to break the bullish market structure, it has to break its recent higher low formation. That's where the break is. Remember this. Similarly, in a bearish market structure, again, if the price stops making new lows, you can see the structure is still valid. For the price to break the bearish market structure, price has to break its more recent low high formation. That's a break of market structure. So remember this. The first two sessions are purely the rules surrounding market structure before we start hitting on the charts in the session 3, session 4, and session 5. Now, the first two sessions are purely the rules as I've explained earlier. Session 3 is explaining bullish and bearish market structure on the charts. 4 is again a review of bullish and bearish market structure, but with a bullish and bearish market structure, 2 time frames analysis. That's a topic for lecture 4. And for 5th, we will be reviewing all of it together again. So please make sure that you attend all these 5 lectures. These 5 lectures is everything as far as a market structure is concerned. And market structure is a soul and essence of every trading strategy. So let's get on with this. Now, as you can see that the price has been in a bullish market structure, it has been making higher low formations, higher low formations, higher high formations. And then the price stops making higher high formations. You can see this there. What I said is that if the price stops making a new high formations, high formations, the structure is still valid, and it's a valid market structure. The price went in a range bound market, but the structure, it's a bullish market structure, a range in a bullish market structure, because the price hasn't breached its recent higher low. There, the price breaks this, which is a break of market structure. And now price has started in a bearish market structure in which price makes low high formations, lower low formations, low high formations, lower low formations. For the price to break this bearish market structure, price has to break this more recent low high formation. Now, these are the rules. Now, let's consider this further. Price can retrace all the way to the more recent higher low. It still be a valid bullish market structure. Remember this. Price has to clearly break this recent higher low formation to confirm the break of market structure. So market structure remains valid. It remained valid, still valid. That's where the break of market structure has taken place. So remember, price has to break its more recent higher low to break the bullish market structure and a more recent low high formation in a bearish market structure. Now, how we normally trade in a bullish market structure, we are presumed direction is upside. So you're looking for buying opportunities, and your buying opportunities will be at every higher low formations. These are your buying opportunity. Now, there are precise rules surrounding how the formation of higher low forms. That's a different topic, but we are discussing the market structure in this series, so let's focus on this. Now, every higher low formation is your buying opportunity. Every higher low formation. Now, when the price, listen to this, when the price breaks the bullish market structure, it breaks, as you can see there, the price breaks the bullish market structure. So it leaves the bullish market structure. It means it will be entering into a bearish market structure. So when we should start selling? The first, after the break of bullish market structure, the first low high formation is your first selling opportunity. After that, every low high formation is your selling opportunity. Remember this. We and you don't buy at higher high formations. No, in a bullish market structure, you will be looking to buy at every higher low formations. And in a bearish market structure, you will only be looking to sell at every low high formations. You will not be selling at low formations. Important to understand. Extremely important to understand. Again, let's see this further. Price is in a bullish market structure. Price breaks the bullish market structure as recent higher low has been reached. Price can make its first low high formation all the way to this high and will still be a valid bearish market structure. So remember, the price can retrace all the way to this previous high, all the way. As long price does not reach this, you are in a bearish market structure. You are in a bearish market structure. So here, in this example, the price retraces to this level, as you can see, and carries down. So low high was established there. Price can form a low high formation there, still a bearish market structure. Price can retrace all the way, almost to this level, 100% retracement, still forms a low high formation and carries to the downside. So remember these rules. These are the rules surrounding the market structure. And when we will be hitting the charts in the later lectures on the series, we will be applying these rules to read the price action, to read the market structure, and you'll see how effective it is. I'll say it again. After the price breaks its bullish market structure, I'll say it again. After the price breaks its bullish market structure, the first selling opportunity will be when the price forms its first low high formation. That's a first selling opportunity. That low high formation can be at any place, but it will be below its previous high. Now, if the price is in a bearish market structure and it breaks the bearish market structure, as you can see, the price breached the previous low high formation, the first buying opportunity, because price left the bearish market structure, so it left the bearish market structure, it's going to start a bullish market structure. So in a bullish market structure, you're looking for buying opportunity. The first buying opportunity will be after the break of low high formation, as you can see, is when the price forms its first higher low formation. Remember what I said, in a bullish market structure, you are buying at every higher low formation. So the first opportunity to buy after the break of bearish market structure is the first higher low formation. Remember that higher low formation can be at any level, but it will not break the previous low. It will never break the previous low. So let me show you this again. That's your low, price breaks. Now, this can retrace here. It can be anywhere, but it will never break this low. If the price breaks this, then your bullish market structure is gone. So remember this, that retracement can be at any place: 38.2, 61.8, 78.6, 88.6, or 100%. Price can form a higher low at any place, but price will never break its low. And if the price breaks this, then your bullish market structure is gone. So after the break of a bearish market structure, your first buying opportunity is at the first higher low formation. Now, there are specific rules surrounding the formation of higher low, which we will be focusing on at some stage in the future. In this series, the objective is to focus on the market structure, its rules of the market structure, and then applying these rules on the charts to establish the market structure. Now, this was a second lecture on the series. In the third lecture, practical training on the charts of the rules that we have just learned in the first and second session. Fourth session is 2 time frames market structure analysis. It's an extremely important analysis, and if somebody can understand this analysis, they shouldn't have any problem trading with the market structure. You would really understand how the price moves. Extremely important. And the fifth lecture is a recap of all of it, and I will be discussing, answering from the questions that have been sent to me. So make sure you're attending these lectures. Extremely important and helpful series, and it will definitely take your understanding to a different level. I hope you enjoyed the session. If you have enjoyed it, leave your comments, and I'll see you in the third lecture of the series. Thank you.